In today's session of Visual JForex, we will be trying to design an exciting strategy using the indicator DMI, Average Directional Movement Index, and we will be utilizing this indicator to design and develop the scalping trading strategy. We will use different time frames, 4 hourly and 5 minutes, to give us the idea of the underlying trend and its strength. So whenever we see that momentum is bullish and it has a good enough strength, we will be looking to initiate the buy trade. When we see that the underlying momentum is bearish with a strong movement, we will be looking to initiate the sell trade. So let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. You will find these indicators listed amongst the oscillators. First one it is DMI. We have to define these 4 input values, depending on which we will be getting these 3 output values. First is the instrument of choice, whichever instrument you want to work with, whether it is Euro USD, USD JPY, NZD USD, or any currency instrument. You can choose the instrument, and with the help of this, you can design the algorithm for that particular instrument. Then comes the question of time period. This is quite important. We have to be mindful of the time period importance, and if we want to use the lower time frame strategy, then the time frames like 5 minutes, 10 minutes, 15 minutes are good enough. If you want to be trading from the medium term perspective, then the candle period of 4 hourly, or for that matter even daily, is more helpful. So you have to choose this input value quite cautiously. And for this session, I'm going to take the 4 hourly candle period and look back period. We have to see whether we want to use the current candle period's DMI output or the candle which has already closed, and we have to define this shift value accordingly. If you are looking to use the last candle period's DMI output, then the shift value of 1 is good enough. So you have to define this by the number of candles you want to go back in time. If you want to retrieve the data 5 candle periods back, then you have to use the value of 5. So that's how this works. Signal period, I will leave it as it is, default value of 14, and then depending on these input values, we are going to get the ADX, DI plus, and DI minus. ADX gives us the idea of the strength of the trend, and these two values give us the idea for the direction. Whenever we have the DI plus above the DI minus, that means the underlying momentum is more favorable for bullish trades, and when we have DI minus above the DI plus, that means the underlying momentum is bearish. So we will be utilizing these output values to define the conditions. Now I will give you the idea of the algorithm. I will change this to the Euro USD. We will be considering the larger time frame data, the 4 hourly candle period, and on this we will need, for the buy trades to be executed, we will need the DI plus to be greater than the DI minus. So somewhere here we had the DI plus above the DI minus, and after this bearish momentum gains strength, we had this crossover where the DI minus went on to cross the DI plus, and DI minus value was above the DI plus for quite a considerable amount of time. So in this kind of situation, we will be trying to look to initiate the sell trade. So we will be taking the help of these two output values. We are not really using the third output ADX on the 4 hourly candle period. We will be using the ADX of the lower time frame, and these two values are going to be helpful for defining the direction and trend And for strength, we are going to rely on the lower time frame charting. So provided we have the bullish crossover in place, we will be looking to initiate the buy trade whenever we have the ADX value about 25 and rising. It should be rising and not declining. So that condition is quite important, because many times what happens is that after the underlying instrument has run, it has already moved a lot. It can be on either side, bearish or bullish. Now that we are talking about buy trade, I will give you the example of the upward momentum. Suppose ADX has run higher and underlying instrument has run higher. In this kind of scenario, we will have the ADX value quite higher, and eventually, as the momentum fades, it will start to decline. But even in that kind of scenario, if it is about 25 and crossover can take place, so we don't really want to trade when the underlying instrument is going sideways. So to avoid that kind of situation, we will be adding this condition that ADX should be rising and about 25. Okay, and this crossover condition is going to be crucial. So somewhere here we have the ADX value above 25, but it is declining. So even if we see the DI value crosses above the DI minus value, we will not really be executing the buy trade. So that's how this is going to work. And for the sell trade, the similar kind of requirements will be there. The only case is that we will need to see that the DI minus crosses above the DI plus. So whenever we see DI minus rising above DI plus and ADX condition is in place, we will be looking to initiate the sell trade. And of course, our 4 hourly condition should also be in place. So that's how this is going to work. Now we head back to the Visual JForex board, where I will explain to you how you can execute the idea using this platform. So first thing first, we are going to need the logical blocks, 3 if blocks. On candle will be the start point, and instrument subscription needs to be done. The instrument of choice for this session is Euro USD. Default instrument should match the on candle instrument, and then the candle instrument should match the instrument of choice, which is going to be Euro USD for us. Here it comes. Okay, and after this we also have to define the condition related to the position info. All position amount will need to be at 0. That means there is no open or pending order on the account. And we have defined this DMI block already. Now 2 more DMI blocks need to be added, which are going to be defined on the 5 minutes candle time oscillator. This I will change to 5 minutes. Same thing for this block. Shift value will be 1 and 2 respectively. Okay, and then we will have these outputs: ADX27, DI plus 27, DI minus 27, and similar for this block also. And as we are relying on the DMI for guiding the system for the strength of the trend, we will not really be relying on the price action data this time around. In most of the session, I take the get historical candle to look at the price volatility, and we define certain minimum pips which need to be fulfilled. Usually we take the difference of the last hourly or last 4 hourly is candles high and low, or closing and opening difference. But this time around we are simply relying on these DMI blocks, so we are not going to add those conditions. But to pinpoint the exact entry point, we will indeed have to take the help of the get historical candle. So for that, I will add 3 more get historical candle blocks. Info. Okay. First one will be of 5 minutes, and then 2 more of 10 seconds each. I'll change this candle period to 5 minutes. Shift will be 1, and these 2 will be changed to 10 seconds each. Shift value of 1 and 2. 1 for candle 30 and 2 for candle 31. Okay. And though we didn't really take the help of get historical candle to define the volatility, but since we are using the scalping techniques, it will be very important for us to make sure that the stop loss and the target price get defined as per the immediate price action. So for that, we will be indeed taking the help of 1 more get historical candle, and that will be hourly time period. So whenever the system will be placing the order, while determining what kind of stop loss and target price might be appropriate, it will look at the last hour's price action, and accordingly it will place the order. So for that, I'm going to take 1 more get historical candle block, and we can take the difference of its closing or opening price, or if you wish, even the difference of its high and low, and accordingly the stop loss and target price can be defined. I think it will be better to take the help of its high and the low, so that will give us the idea of the range for the underlying instrument. So I will change this to 1 hour, and this will be changed to 1. So this will be the last hourly candle which has already closed, and after that all we need is add 1 more mathematical calculation expression block, and consider the candle 32's high and low difference. Okay. Auto created variable. We need candle 32, candle high, and candle 32, candle low. A1 minus A2. Okay. And whatever is the difference, this will be helping us in defining the stop loss and target price later on when we will take the trade command block. Right now we will simply calculate its difference. So high, low difference, that's it. And we will place this block right here. And with this, we will stop for today's session. I hope you have been able to understand the setup so far, what we have already done. It is quite simple. These DMI blocks were added, and after that, we have taken this get historical candle data. First one is of 5 minutes, then these two are of 10 seconds, and last one is hourly for defining the difference of its high and low. That essentially means the price action data. That's all for today's session. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on market developments. See you next time. Till then, goodbye.